Welcome back to Global TA. Today we're going to dig deep into some indicators and some trends, how to use these and amalgamate these to better improve your trading strategies, really help you in the beginning with paper trading so you can identify these trends, you can back test these things. And I'll be showing you exactly how to use these indicators. Just right off the bat, one thing you need to know is how you do this, right? So like I said, throughout all these episodes of the course, which by the way, if you haven't watched the previous ones, go back, watch those. There's a playlist on the channel called Global TA. It's linked down below in the description. You can watch all of the previous episodes. Typically, we do one every Sunday. So let's hop right into it. So for indicators, what you want to see is right here. It'll have that FX. So if you're on mobile, it'll be on this side, right? So it'll be on this side, or depending on your layout, it could be down here. But what you want to look for here is FX indicators, right? So you can also click here, and these would be your favorite indicators. So if you're just starting on a completely clean slate, you will not have any favorites. So some that you can start out with, which I recommend you potentially use in back test. Again, what we're looking for here, right? What we want to talk about is beginning with the end in mind. So there's no reason to just buy some fancy tool at the tool shop if you're never going to use the tool, or if you don't know what it actually does, right? If you're just going to frame it on your wall and go, hey, look, I have this this beautiful drill or this beautiful saw, but I have no idea how to use it. Well, it's same with indicators. You can talk all about how you love the EMA or you love the SSL or you love volume, which volume is kind of a basic one. We'll get rid of volume here for a second. Volume just shows you I'm assuming you guys know what volume is if you've made it this far into the channel, but it just kind of shows the volatility, right? So like the total trading amount in the day. So if we see a volume confirmed breakout, for example, that's something that really helps us because it's adding multiple areas of confluence. So one other thing is when you look these up. So for example, one that we do not have on here that I would like to add is RSI. So RSI is one of the ones we'll be talking about, which is the relative strength index. And if you want to put this on the chart, what you would do is just click it right here, right? So the problem is, and this one thing you'll realize with TradingView is they offer a free service. Now, the paid service is okay. You can get it if you want, but you can get away with using the free service very easily because the key thing here is to really only use about 3 tools. Think about it like back to the tool belt analogy. You don't want to have all these fancy tools in your tool belt and then they're just dragging you down. Rather, you want to have the ones that you can perform the best with, right? So we're combining indicators with patterns. So remember in the previous Global TA, we talked about kind of basic patterns. Let's go over those real quick, right? So we have triangles. So we have, let's just say ascending triangle. So this is what an ascending triangle would look like, right? So an ascending triangle, price would essentially consolidate within here. And then typically an ascending triangle might bust down, right? And the bust down is the measure move breakout from here. So you would take that length and put it over there, right? Okay, so besides that, we have symmetrical and descending triangles. And let's see, do we have a good example of this? Probably do somewhere. By the way, this is just on the gold chart, and this is just an example of how you can use all these different indicators. Yeah, this is a decent example of one, okay? So let's just go here, boom, 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 here to here, right? Okay, so this is, you could say it's not the cleanest symmetrical triangle, but you see what I'm saying, right? So the measure move price target breakout is right here. So again, you would measure this and you would look for a breakout. Now, the main thing here is this is just using one tool in the tool belt, right? This is just using one trading pattern. And that's what I really want you to understand is, so you would set up a long position there. So that's how you would do the trade setup. In later episodes, I'll talk a lot more about actually how to use the exchange. We've mainly been focusing purely on technical analysis, but when it comes to trading, it's like you have to identify these trends here on the charts, but then you take them over to the exchange, and that's where you actually do the trading, whether it's Binance, whether it's Bybit, whether it's Femex, whatever you use. This is how you would set it up. You would look at your entry position down here, put that into the exchange, look at the target area right there, put that in an exchange and take profit, look at the stop loss, put that in an exchange, set that there. So now that we understand that, basically and then obviously you have descending triangles, you have descending wedges, rising wedges, descending channels, rising channels, bull flags, bear flags. Go check out that previous video on this. And so right here, what pattern are we in, right? So we're in a descending wedge. So price is just kind of moving a bit sideways and downwards, right? So that's really what's happening. We're seeing lower lows and lower highs. So that's essentially the trend. But we did a bit of a W down here, right? So apologies. We did a bit of a W, which for a W, you want to see a higher low and then a move up from there. Okay, so that was a good W. By the way, a lot of people get wrecked with W's and get kind of destroyed. Near the end of this video, I'll talk a little bit more about how to use some a little bit more advanced patterns. But the main thing I want to focus on in the beginning of this video is indicators. So, right, so we just recapped these patterns. So these basic patterns you can use, and we're using one right now. So we're using descending wedge, but what we don't have is Confluence. And again, with Confluence, what you're looking for is, okay, first off, you should understand the very, very basics of technical analysis. Go watch the beginning videos in this course. Then you go, okay, support and resistance. Let's just lay out basic support and resistance lines. For example, this would be, I mean, this isn't a super historic one, but we can just use this as a level right here that we kind of bounced off of, right? So we kind of bounced off of this level and pushed up. Here is another example of one where we have kind of that top right there where we experience a bit of resistance there, bounce down from there hard. This is a level of Confluence. So you're using this trend of the descending wedge in partnership with this support and resistance line, right? And this is just an example of support and resistance. Typically, you want it to be extremely historical. But right here at this, what level is this? So like 1964, we met two areas of Confluence. Now, this is just in patterns. What we want to add to the situation is indicators. And indicators basically tell us things that we can't really see, right? So it's basically using mathematical equations. For example, the EMA is taking here, I'll just show you right now. So using the EMA 20, 50, 100, 200, well, what does that mean? EMA 20, 50, 100, 200, each of those numbers represent how many candles previous. So the exponential moving average of the past 20 candles versus the past 50 versus the past 100 versus the past 200. And then you can see them laid out here. So the 200 is the blue line, while the 100 is the kind of turquoise line. Okay, you see that? So what you want to use here is, okay, the EMA ribbon, the trend is really your friend. These are period moving averages. Okay, so whether it's the 20 period, the 50 period, the 100 period, or the 200 period, that really doesn't matter. Well, you can test different things. Again, what you want to look for here is Confluence. And so, for example, this is a great example of Confluence, right? So it's coming back down to retest this line. So if we retest this and move higher, well, we would be a little bit more blind if we didn't have this EMA ribbon, right? So once we add that in, we go, okay, now we can be a little bit more confident because we see this 20-day moving average. It's coming back down to retest that. Now, if it busts below the 20-day moving average, typically the trend is your friend with EMA. So you have to keep that in mind. Obviously, the 20 is the shortest out of all of them. I like to use historical data as much as possible. But with the EMA, trade with the trend if price falls below, typically. It will continue, and vice versa if it goes above, okay? So if it's below like this, or here, if it's above like this, let's use this as an example. This is a great example. So short term, it busted down, but popped right back up. Now, see how we've kind of been bouncing off like waves, right? Like, think about it like you're a jet ski and you're bouncing off these waves, Then we had a crazy move higher, then way overextended. So that's something that you can use something like the Bollinger Bands for to see, okay, is this overextended in the just in the standard deviation? That's essentially what the Bollinger Bands is, which we'll talk about here in a second. But you see how we're way overextended here from this red line, especially from this blue line. That's why people say, okay, we at some point, like here, if people were predicting, hey, look at how far away we are from this 200-day moving average. I mean, we're pretty overextended. That's a bit crazy. And that's where it kind of signaled this trend of, okay, we're a bit oversold, right? So that's where you would use something like the RSI, the Relative Strength Index. So I hope you understand EMA a little bit better. I'm happy to do more videos on this. Just let me know in the comments if you have any questions throughout this whole video. Any questions at all. Also join the Telegram group, link down below in the description, and I can help you on individual questions. That way, if you have specific things, we can kind of walk through it together. So definitely join that Telegram group, link down below. Like-minded investors looking for global investment strategies. So one of the things you have to understand is there's multiple indicators for each EMA. So for example, let's just say you're like, okay, yeah, invest global. Let's type in the EMA. Well, how many of these are there, right? It's pretty crazy. Well, honestly, what I do, what's pretty simple is you can look some of these up, and because anyone can kind of create custom ones. These are all usernames, right? People that have created indicators. Some people create paid indicators. I typically like to use the ones with the most usage, right? So if around 7,000 people use it, 5,000 people use it, That's not bad. And you just want to make sure that it is actually working correctly. It's what you want. Now, some of these at the very bottom may not be at all what you're looking for, right? So some people kind of combine all these together. But again, this is just a tool in the tool belt. So you can think of this like a hammer, right? So when we dump below this, this was, okay, so now the trend is kind of your friend, but we hit this W pattern, we hit this level of Confluence, right? So that's kind of a key level of support based on back here, back here, back here. And then in this descending wedge, which is a bullish pattern, we hit the bottom there, plus we hit a W. So that's multiple levels of Confluence. That's where I would have made the trade. I would have made the trade off this neckline right here when we had volume confirmed breakout. So remember what I mean by volume confirmed breakout, what you're looking for. This individual chart, I guess the volume isn't that useful. But I mean, if we go to Bitcoin or Ethereum, you can see that volume is basically, okay, the spike in people entering the market and really injecting capital. That's what kind of drove this. Now, in the short term, remember, okay, what's this pattern though, right? So this pattern is a rising wedge. I mean, it's pretty parabolic, right? So this is a pretty quick rising wedge here for gold. And remember, we're on the daily charts. So all of this kind of macro view. So when we're in this level, okay, let's say we push down here and retest. Now that's going to be huge because we're retesting that. Remember, we're retesting that 20-day moving average, that red number. Okay, we're retesting this line on the descending wedge. Plus we have this. Okay, so this is going to be a make or break situation. Now, if we break down, that's not going to be bueno because you can see this blue line. If we break down out of here, typically it's going to be a relatively sharp breakdown back into this wedge. Now, it's all probabilities. You have to remember that with technical analysis, it's never certainties because anything can truly happen. So let's say we have this breakdown. Maybe we touch these rising, these EMA ribbons. Maybe we touch up here, get rejected and push back down and kind of fall back, right? So that's just one scenario, but we can move on. So I hope you understand the overall view of this. Remember, the idea here, beginning with the end in mind, is you want to combine these and kind of form your own recipe, if you will, form your own amalgamation of each of these indicators. And okay, how do you do that? Well, go to any chart and just back test it, right? So if you have a thesis saying, okay, I'm going to use the EMA ribbon, I'm going to use the SSL, which by the way, I'll explain these here in a second. This may look really ridiculous. And then I'm also going to use volume, even though volume isn't that good on this chart. Well, that's kind of your own recipe, right? So you don't want to copy what I'm doing. You don't want to copy what someone else is doing. You want to form what's best for you because really what you're looking for is something that someone else doesn't notice. Nobody else notices in the market. And when you combine certain things, when you start going, okay, like when I start combining these patterns, when I start seeing double tops, like right here, when I start seeing this kind of M pattern or seeing these descending triangles, this is another double top, kind of an M looking pattern, or seeing these sharp declines, well, how can I use this? When price touches that bottom, then it pops up, right? So that's kind of creating that recipe. Again, that's just kind of beginning with the end in mind. So I also did want to talk about Bollinger Bands. So again, with these indicators, guys, remember, TradingView only allows you a certain amount of free, and it's really not that expensive. I mean, it's not a big deal at all to get the paid version, but just out of kind of a simplicity's sake, since I know some people won't be using the paid version, for these global TA videos, I'm just going to do it on the free version because it's really easy to do. Here, we'll get rid of this for a second. But as I was talking about earlier with the Bollinger Bands, really what it is a deviation. So standard deviations, basically this idea of regression to the mean, right? Okay, so first let me pull this up. So Bollinger Band strategy. We don't want the strategy. So typically, let me get rid of this for a second. So we talked about the EMA. We'll get rid of that. and that's basically the only thing here. You can really have unlimited, but you can only have, I think it's like 3 or 4 in this space right here. So again, with your indicators, we're going to find them right under the actual ticker. Then it's kind of this drop down menu. You can hide them here. You can change the settings here. So for example, with the EMA ribbon, let's say you want to change the color or you want to change different things here, you can do that. So let's go here. We'll get rid of volume. Let's go to indicators. So Bollinger. You can kind of think of these as rubber bands. That's kind of how I like to describe them is, these truly are rubber bands. So it's regression to the mean. And this middle line is kind of is a moving average, that red line. So remember, this is basically exactly what we saw in the beginning one. So what this is telling us is that these are the kind of standard deviations. Typically, it's 2 standard deviations away. And you can think of these as rubber bands. When we're overextended, we typically snap down. When we're kind of when we're overextended towards the upside, we typically snap down, and vice versa with the downside. So when we're extended down here, we typically snap up. So you can see kind of these price movements down here, and typically we have some a little bit of a kind of back and forth here at that midpoint where it's the mean. So again, remember, this red line is the mean, and what you're looking here for is a regression to the mean. So I talk about this in a just simple strategy, but let's say you're using the hourly time frame. So let's flip to that, which, by the way, if you're confused on, I talked about this in previous episodes of Global TA, but essentially the time frames really just indicate what each of these candles mean. So for example, here, each of these candles are 1 hour, and we talk about the anatomy of a candle. Go watch those videos. So for example, let's see this. Well, right now, what are we doing on the Bollinger Bands, right? With gold, you can see this kind of progressing. The price is moving back and forth. We were down here, maybe we were not too overextended, right? Here we were a bit overextended, here we were overextended to the upside, kind of pushed down in this descending wedge. Again, remember, I hope you're kind of picking up the points here, guys, is you're picking up this as I do it, because when you back test, it doesn't matter if it's recent price action. What's fun is to go, okay, let me go right here and let me guess, how should I trade this based on the Bollinger Bands? And then you can pull out, okay, now I get the Bollinger Bands. Now let me use the EMA Ribbon, which I'll talk about next, which is basically just a kind of automated version of that first indicator I showed you. But with this, and by the way, guys, if I'm talking too fast or you're a bit confused, you can always just rewind these. Let me know in the comments. Again, I can always make updated versions. I'm happy to do this, but let me just point this out. So what we're looking for here is regression to the mean. So typically the more overextended we are, so the more kind of like this, for example, way overextended, that's the same pushback. So that's why I'm calling it the rubber bands, because it's truly the kind of laws of gravity. If you're pulling hard one way, what goes up must come down. So what went crazy up must come down. What went down must go up, right? So you have these kind of waves, if you will, in technical analysis, and this is how you trade potential breakouts. So typically what I look for on Bollinger Bands, for at least the overall strategy, is, for example, right here, we're bearish. So as long as you're under this red line, this mean or EMA, this moving average, well, it's going to regress. So if we're overextended here, what we want to look for is a potential long position, right? Because we're bearish. Okay, we're bearish. Now, if we find a bullish engulfing candle, so we didn't see any, right? I mean, this is a bullish engulfing candle, but ideally you look for one on the bottom of the Bollinger Bands. So let's see if we can find a good example, right? So this is a decent example, although it's not the best trade setup. And you can just look for the inverse. Let's see. Here, perfect example. So bullish engulfing candles, basically small red candle, large green candle following it, okay? So here, small red candle, large green candle. But in this case, small red candle, large green candle, okay? Let's see. There's probably about a small red candle, big green candle. But see how this candle took up this whole space? When price is consolidating and it's not really doing much, this isn't the best time to trade, right? This is just a consolidation, market kind of moving sideways. That's where you want to look for a big breakout. You can use things like macro indicators or trends to go off of. But if we see this bullish engulfing candle, well, how high up can we really move? Well, we saw we can move a little bit higher, right? But the key thing here is, if we saw a bullish engulfing candle down here and it was just small and this didn't use this whole way, so let's say we saw like a small red candle like this. Let's say we saw this, and then we here, flip it here. Sorry about that. And then we saw a bigger green candle like that, and flip that to green. Well, that's a bullish engulfing candle, right? So you get my point. Similar to this, but with this, you see how this took up the whole space, that whole distance of the Bollinger Band. So that's the whole standard deviation. It's a giant volume candle, and the price moved a lot right there. But here, it's just beginning this trend. So that's a potential where you would start, okay, so not only are you overextended on the Bollinger Bands towards the downside, right? So that's one area of confluence, but you also have this bullish engulfing candle. So potentially you could enter the trade there, set a nice little tight stop loss, maybe at the bottom of your Bollinger Band, so it's 0.27, and then really maximize that upside. And you could potentially have pulled profits there. And this is obviously hypothetical, but as you go back and back test this, you'll start understanding this a little bit better. So that's about it for the Bollinger Bands. I mean, as I said, when you're overextended, that's a potential short position, like right here. We're a bit overextended. We had I guess you could say this is a bearish engulfing candle right there. You see, because it's so remember, it's just the inverse. It's always, bearish versus bullish. It's really the same type. So remember down here I talked about how this is a bullish engulfing candle because it's a larger green candle following a smaller red candle. Well, it's the same for bearish engulfing candle. With a bearish engulfing candle, you have a small green candle followed by a larger red candle. So right here is a decent example. Smaller green candle, again, you're looking for the body mainly, the closing and opening. So right here would be potentially, okay, maybe we'd want to open a little short position here because we see this bearish engulfing candle, boom, we pop open this the short position, we set our stop loss right there to the top, so 0.29, and then we take this profit. We get to ride this volatility and make money on the downside. Just like, when Bitcoin dropped, a lot of people made a lot of money. A lot of people increased their overall size position. And you can see there, you have a decent risk to reward ratio. And with something like gold, it's a bit more stable. But when you're trading crypto, when you're trading Forex, these things can be extremely volatile. And that's where you can make a lot of money. And just for example's sake, let's just hop on over to BTC, right? So let's just hop on to BTC USD. Bitstamp, I probably have some things laid out here. But just as a macro view, if we go here. Okay, so I had drawn this out in previous technical analysis videos, but this is a descending triangle, right? So a descending triangle, we only have the Bollinger Band set up. How can the Bollinger Bands help us? Well, in this descending triangle, we saw that here we were overextended on the Bollinger Bands. Here we were overextended on the Bollinger Bands. So while we are in this descending triangle, which is technically bullish, these can help us gauge whether or not it'll break towards the upside, towards the downside. I've talked about, these are the key levels you want to look for in this triangle pattern. You can also draw it like this if you're just using the wicks, which would make it more of a symmetrical triangle, which isn't a bad way of drawing it. But I kind of like it as this descending triangle. It's all kind of preference on how you trade, and this is kind of how I would look at it. Is these are kind of fake outs, right? Fake outs out of these patterns, kind of anomalies. But moving on. So again, Bollinger Bands, think about it, regression to the means, standard deviation from the moving averages. Look for when it's overextended. So here, a way overextended, way snapback. Way overextended, way snapback. Overextended, snap back down. Overextended to the top, snap back down. So that's kind of what we're looking for. And then kind of as it consolidates, we'll see that massive push up or massive push down, in which case, we'll probably be overextended, and then you'll look for a short position here or a long position here, okay? So again, the trend is your friend. Remember that, guys. Remember combining Bollinger Bands with EMA and the EMA Ribbon. So this is one that I actually kind of like to use at points because it's somewhat of an automated one. So I don't like to trade just based off of it, but you can see they really have a ton of indicators in here, and they're combining multiple EMAs and kind of help you understand this, right? So when the trend is your friend, so see how, as I was talking about with the jet ski, like think about these waves, these kind of ribbons as waves, right? So you're in a jet ski and you're popping off. Oh, you went underwater. Oh, it's hard to get back up. When you do get back up, that's when you start riding those waves, and now we're below it. We're trying to go above water. And so we could just get pushed back down here. So since we're technically below it right now and we're kind of in this bearish formation, we could just keep bouncing off. Sorry about that. I go here, pull out my brush. I did not mean to do that. Brush. Okay. Right here, so let's say we just keep getting rejected. That's where we, potentially have that massive push down and push way, way down, okay? So that's kind of talking about the EMA ribbon. You can check that out. Again, if you have any questions on any of these things, let me know in the comments down below. Next, we'll talk about the SSL. So this is actually something that I really like, and a lot of people understand, but I don't think really they see it, they use it, but they don't really use it properly. So the main thing with the SSL is what you're looking for is this green and red line, right? So and you're looking for crosses. So when the green line crosses the red line, okay, so this is the main thing. When the green line crosses the red line, when the green line crosses below the red line, it's a sell signal. And when it crosses above, it's a buy signal. So for example, let's just look for potential setups here. It's a bit harder to see, but essentially, here we go. This is perfect. So when you see this green line cross above this red line, so right here, cross above, then we cross below, you see this red line kind of pushed up. Back here, red line cross below, green line cross above, reverse. Okay, so these are all buying and selling signals, right? So the main thing here is to understand, let me just repeat it one more time. When the green line crosses below the red line, so right here, when the green line crosses below the red line right here. In the short term, this was kind of a bit of a fake out, but you can see if you backtest this, it actually works very, very well. So here's an example. We saw this green line cross this red line below. This is a sell signal. So that would be a potential setup to go, okay, hey, wait a second. We have multiple levels of confluence, right? So we have this descending wedge right here, and then we kind of fell into this triangle pattern. Well, right here, we saw the short term, we got rejected off this descending wedge, and we started to push down. Now, if you're using the SSL, this can actually help you because you saw this green line cross below the red line. And when that happens, that's a potential sell signal. Now, should you base your trade purely off this? No. You should use multiple levels of confluence. So you want to kind of think about this like you're a detective, right? So you want to think about it like you're Sherlock Holmes. You don't just want to go off one piece of evidence. Rather, you want to combine multiple. That's why I talk about confluence. Combine these different kind of tools. As I talked about, I'm kind of using a lot of analogies here, but kind of just like a recipe, you need to combine all these raw materials to really make it great. Now, if you kind of get overwhelmed with too many raw materials, like if you have 20 indicators up here and you're trying to use all these advanced things, you're using ABCD patterns, you're using eclectic lines, you're using time cycles, you're using SIN lines, you can get wrecked very easily, especially if you're starting out. That's what I talked about, with support and resistance. You can literally just trade off those. So support and resistance is the basic thing. Then you move into some basic patterns, bullish engulfing. You can use bullish engulfing and bearish engulfing candles, which is really, I guess you could say it's a pattern, but it's really more of a candlestick type indicator. So with this, descending triangles, ascending triangles, symmetrical triangles, descending wedges, rising wedges, all these different things, you're looking for multiple levels of confluence. So here again, we got rejected off this historical level here, moving towards the downside. That would be our sell signal. We'd take nice profits there. And then, what happened at the bottom here? Well, the green line cross above the red line. So that's a potential buy signal. Again, don't trade purely off of this, but I hope you understand what I mean by SSL. Now, lastly, I'm going to talk about RSI. Again, I kind of mentioned it earlier, but the relative strength index is actually very, very powerful. And it's something that I actually really, really like. So if we go to RSI, you can see relative strength index right there. Let's give it a nice little star there. This is something that's a little bit different, and you'll see with other patterns or other indicators, which maybe I'll make a part 2 to this one on even more like expert indicators. But here, what you're looking for is this rectangle, right? So this actual rectangle right here between the 69 and this, this is just an example of the chart. But what you're looking for is anything that breaks out. So right here, maybe it's a little bit overbought. And right here, maybe it's a little bit oversold. So you're really looking for, I guess, outliers on this. So typically price just consolidates in here, right? So that's typically what happens. But when price really, really breaks out, like here, for example, that's oversold. And the main thing is not to trade it just based off that. The main thing is to go, okay, here, this is way better when we zoom out. So this is massively oversold. This is massively oversold. Well, does that mean that you should just buy? No. You should look for a nice entry position. So, for example, right here, this lines up perfectly right there. So we were oversold right here. We wicked way, way, way down. And similarly, we hit this support level, right? So we hit this historical support level. So that's 2 levels of confluence. We're using this RSI, and just to reiterate, when it's below, so you see this rectangle, this kind of purple rectangle here with the dotted lines. When it's above the dotted lines, it's a bit overbought. When it's below the dotted lines, it's a bit oversold. And again, you have to understand that this kind of helps you understand the market a bit better, and you can customize this one a little bit. As I said, with these indicators, if you're looking to kind of switch things up a little, let's go here. Sorry, let me pull this out. We're looking at RSI. I'm not sure why it's not showing up there on my, here we go, RSI, relative strength index. Let's go there. Come on, buddy. Okay, well, it's not popping up. The point is, when you see the RSI, sometimes there's little problems like this. When you see the RSI, maybe we'll be able to edit it down here. No. Okay, so when you see the RSI here, for example, if this is RSI, which it should be popping up, you can just hit settings, and that's where you can kind of change these things. It's the same here. So you can kind of edit these lengths. And what I recommend, and see this like standard deviation going back to the Bollinger Bands, is kind of playing around with the 4, 7, and 14 with the RSI, the relative strength index. And again, if the line is above the rectangle, it is overbought, and if it's below, it's oversold. Do not trade purely based on this. Rather, use it as evidence and look for a reversal, a buy or sell signal using the other indicators. This is where, again, you're combining all these ingredients. Think about it like, the best, you team the best chef in the world up with the average mom who just cooks for kids on a daily basis. Well, you give the average chef, they're trying to make the best soup in the world. You give the average chef the ingredients of, chicken broth and noodles and salt. And then you give the mom all these nice ingredients, nice seasonings, nice meat to put in there, maybe some vegetables, and she makes this amazing soup. Well, is she really a better chef, or does she just have more kind of tools in the tool belts or more ingredients, right? So this is how you want to look at indicators. That's the whole point here, because you can kind of get lost in the, you can kind of lose the forest through the trees, if you will, if you get too confused. But test these out. Even just pick one and go, okay, let me use what I've learned throughout this course. Let me pick one indicator. Maybe it's not even one that I mentioned. Maybe it's one that you look up. I highly recommend becoming more curious. The curiosity factor is honestly one of the most important things, not only in trading, but in life. I mean, the more curious you are, the more interested you are in new innovations, you really start opening your eyes up, right? So you start seeing things that other people are not seeing. And that's where you truly see innovation is, when you combine all these things together and then you start going, okay, I'm going to back test this. My thesis is I'm going to combine the, let's just say the EMA ribbon with the Bollinger Bands, which I personally like. And then maybe you also want to toss the, RSI on there. So boom, we have these three. Now this may seem like a lot. But again, it's just more ingredients in the soup, if you will. It's just kind of more tools in the tool belt, but you don't want to get too dragged down. As I said, you don't want to have, so many ingredients that you make a terrible soup because you don't know what you're putting in there. Rather, you want to identify these trends, trade off of them, and ideally you back test these. So you go, okay, for example, that basic strategy I had laid out. Let's see here. Let me go in here. The basic strategy I've kind of laid out in a day trading scenario is look for on the 1 hour chart. So remember this, you also want to play around with different time frames, right? So if we look here, okay, this is a great example right here. Bullish engulfing candle. We're overextended towards the downside on the Bollinger Bands. We're also in this bit of a descending wedge here. You can see descending wedge right there. You could also say maybe a mini little W there, but I wouldn't necessarily call it that. But you see mainly right here is this small red candle followed by a larger green candle, right? And we're looking at the body of the candles. That's what's most important, the open and the close of the candles, not just the wicks. So that's the bullish engulf candle. That's where I'd potentially set up a trade and maybe set up a trailing stop loss there. So we would enter there. We would set our stop loss, I would say, around this level of the Bollinger Band. Let's see. Obviously this is going back in time, but you can kind of play around with this and go, okay, if I'm committed to setting like a 1% stop loss, I would set it there. And then, you can ride this volatility towards the upside, and the risk to reward is pretty insane, right? So you have this ability to really ride these waves. And let's say you just pulled a little bit of profit here and then let the rest ride. Well, let's say you just move your stop loss up. You really don't have that much risk riding anymore. You're completely de-risked. Like you don't have any downside risk. It just less profit potentially. And you go up from, as we talked about right there, that bullish engulfing candle to these levels, and you just hold it a little bit, and you stay in the trade a little bit longer. Let's say you're using low leverage and just kind of maximizing the gains based on volatility here. Well, 2x leverage, nice little 30%, or 30 to 2 ratio, so 15 to 1 risk to reward isn't bad. Honestly, is not bad. And again, you'd want to use these indicators. So for example, here, another thing we could have used here with this buy signal is, well, we were bit. Now, again, this is not something you want to purely trade off of, not purely trade off the RSI, but we were a bit oversold. Just like right here, we were a bit oversold right here. You see on this kind of bottom where we broke out of this rectangle, we were a bit oversold here, and then we kind of pushed back up. So that's basically it for these indicators. I can kind of show you some other patterns that you can use. I talked a lot about them in the past, but you have things like cup and handles. So a cup and handle looks like this, basically where price has kind of been in this. So obviously it wouldn't look exactly like this. It would look like candles in this space, right? So it would look like this kind of. A lot of altcoins have been in kind of this cup and handle. And then this is where you look for the handles right here. So, and then kind of the move upside is this top to this bottom, and I'm using drawing, so this probably isn't going to look. It's going to look like a third grader drew it, but this is the measure move price target breakout. A better way to do it is just with this. So there, and then based on that handle, that's where you would do the breakout from. Okay, so and then we talked about and by the way, that's a bullish pattern. You can also have an inverse or a bearish cup and handle, which is basically just an inverse where it's literally just flipped on its head, right? So just to draw that out, what an inverse would look like is basically the same thing except here, and then a little bit of consolidation here. We would draw this line across and then measure move this bottom of the cup towards the, in this case, top of the cup, which is reversed towards bottom of the cup, and then that would be our price target breakout. So I hope you understand that a little bit. I know those drawings kind of look like I said, like a third grader, but you get the point here. Don't lose the forest through the trees. We also talked about bull flags, bear flags. Pretty simple to see. Bull flags and bear flags. I don't personally like them that much because they can typically be very, very deceiving if you're just starting out. I prefer just trading triangles. You also have things like head and shoulders, right? So head and shoulders pattern looks similar to this, where you're basically this is a bearish reversal pattern. So let's just go here and let me get rid of this for a second. Boom. And let me just go here just so we have a little bit of free space to draw, right? Okay. So right here we have let's say double top. I talked about that. That looks like an M, and this is technically, so you would touch there again, and that's kind of that neckline right here, right? So that's what you're looking for, potentially a short position off of that. These are bearish reversal patterns, right? So coming into the pattern, we were going bullish. Then we kind of did this little mini consolidation, double topped, then pushed down. So that's kind of, this would be then moving forward used as a resistance line, right? So you also have the reverse, so double bottoms, which is just a W. So double bottoms, same concept, boom, touchdown, boom here, boom, touchdown again. Then you move towards the upside, right? So ideally what you want to look for is a higher low. So this is the low, but you want this low to be a higher low because a lot of people get wrecked again with these. Don't trade these too early, by the way. You want to see this pattern fully evolve and then you trade it from there. So let's see. You also have things like head and shoulders, which head and shoulders is another bearish reversal pattern. So not quite like the W. It's kind of like one small mountain, one large mountain, which is the head. The first one was the shoulder. Then the other shoulder, boom, then here, and from there, that's where we would dump down, okay? So that's where you would potentially set up the short position, but again, some people anticipate these and go, oh, it's going to be a head and shoulders, and they get destroyed. And then you also have things like, you also have a triple top, which is similar to this, but let me go here. Similar to this, except it's just three, right? So it's just here, boom, here, boom, here, then it's massive wick down, right? And typically it's a little bit more harsh, a little bit more intense of a push down. You also have inverted head and shoulders, which is a bullish reversal pattern. So we were in this kind of bearish trend with inverse head and shoulders. You see that kind of first shoulder there, boom, pop, then the head towards the bottom, and then this next little shoulder here, we'd push here. And then once it kind of breaks this neckline, that's where you'd want to go towards the upside. So that's where it'd be a potential long position. So, and same with a triple bottom, right? So just as I had laid out, a triple bottom would look like this. Boop, 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 bah. Right? So that's kind of that bottom. That's not the best drawn. But I hope you understand these. These are very basic patterns. And with these, obviously you want to apply them to charts. So you want to look for places where these happen, go back test these, use the indicators on top of these, and you'll do really, really well with technical analysis. If you've made it this far in the video, definitely give it a like. I really appreciate that. All of this is completely free. The reason I made this course is because I know a lot of people out there are kind of hawking these paid courses that are thousands and thousands of dollars. I really wanted to lay this out. So every single thing that you know about technical analysis, I will be much more on the ball with uploading these every single Sunday moving forward. I'm planning for about 8 parts in this series. They will be obviously more advanced as we go along. Always go back to those fundamental previous lessons in global TA because those really build the framework, build the ground base for moving forward. You can't build a house on sand. It's very, very tough to do. You want to build a house in a strong place, and that comes down to fundamentals. Michael Jordan practiced bounce passes every single day. And that's one thing I talked about in the beginning episodes, that you really can't overlook the fundamentals when it comes to trading, really when it comes to anything in life. So many people are so kind of ADHD that this is a massive problem. So again, let me know if you have any questions in the comments. Definitely hit the like button on this video. Definitely subscribe to the channel. Hit the notification bell. Share this video with someone else who is looking for technical analysis. Share the whole course. Go on the playlist, hit share, copy the link, send it to them. Definitely go check that out. So that's all for this one. If you enjoyed it, like, subscribe button all. Again, let me know in the comments if you have any questions. Invest global, and until next time.